In today's video, we're talking about the EURUSD and how the market remains mostly sideways. However, I do think we could see some decent movement in early May. So I'll explain exactly why I think so. And we'll also take a look at the DXY, which it also remains sideways. But again, I think we could see some movement here over the coming days. So looking at the EURUSD, we're starting here on the monthly time frame. And the reason why is because we have this trend line off of these closing prices from all the way back here during the great financial crisis from 2008. Now, typically, I don't go back this far in a market, but in this case, I do think it makes sense because we have these highs up here. The only one that's a little bit questionable is this swing high right here, which didn't quite test the level, but you can see that we have a couple of highs right here in early 2020s. Okay, so the market right now is hitting this level. In fact, we did see a move above it this month, but I would be surprised if we see the euro, even with the aggressiveness that we've seen recently. I would be surprised if we saw the euro just break out of this without at least some type of retracement. And I'll show you why when we take a look here at the daily time frame. All right, so first though, let's look at the weekly, which you can see that last week we did get a rather bearish candle. Now, the question here is, you can see this line comes in right here. It looks like it's support right now. It could be, but the one thing I'm going to caution you with trend lines like this is that, anytime you're going to go back decades like this, this level could be, 100 pips higher or lower. So really, in my opinion, if you're looking at this in the monthly time frame, that's fine. But once you get down to the daily time frame, it's really difficult to tell exactly where this trend line is. All we know is that it is in this general area up here. Okay. Now, looking at the weekly, like I said, we do have that candle from last week that looks pretty bearish. Okay. Now, to be clear, we didn't exactly see it close, near the lows here last week. It did recover a little bit, but for the most part, this is a relatively bearish looking candle following an aggressive move that we saw here in March and April. Now, right now the market is sitting here at support down here around 112.75. This is the area that I talked about in the last video to keep an eye on, and we did see a bounce from that region. Now, the tricky part though is that since this time, and I'm going to get rid of this trend line in fact because again, on the lower time frames, it's really hard to tell exactly where a level that goes back to 2008 comes in on the daily time frame. So looking here, we do have resistance up here. Again, this is the resistance area I talked about in the last video, and we've got support down here at these lows. So this is the range really that the euro has been in now for the past couple of weeks. And this is what has made trading this pair really, really difficult. But one thing that I do think we could see going into May is a pullback down here into these highs. Now, the reason I think that is, if you'll notice, there are a few reasons. So starting here with this price action back here. So what I want you to look at is this price action back here in this area, right? Notice how we had these highs up here. We had this low. However, before this low, what we had was this low right back here. We saw the euro come down here into this area of value. And from there, we got the rally. Now, if you'll notice, we have some similar price action here over the past couple of weeks where we have this low right back here, okay, following an aggressive rally. So aggressive rally up, we've got this low here, aggressive rally up, we had this low back here. So you can see the similarities already. This right here, we had sideways, price action, the market kind of grinding higher here. Same thing here, right? The market grinding higher during the last couple of weeks. So we have similar price action to what we saw back here in this area. And here we got that sweep of this low, and then that ended up being support and the continuation of the rally. So in this case, what I'm looking for is a potential sweep of 112.75 down here into 112, potentially a little bit lower to test this high back here, but somewhere in this general region down here before we get a bounce from the euro. Now, the thing is, you've got to keep in mind, though, if we were to get a close below this area around 112, then that would start to look a little bit more bearish. But for now, guys, I do think that we could see a pullback here from this price action down here into the 112 region. Now, another reason I think that is, potentially likely is that weekly candle we just looked at. Plus, if you look here at the monthly, right, we're coming into a new month. And what you'll often see, and we haven't really seen it the last couple months, but I do think it's only a matter of time before we get some type of retracement here. But typically when a new month starts, if you got a big move in the previous month, okay, like back here, big move here in this month, you can see where the first part of the next month, dips down here in this area and then continues. And you can see this over and over again with markets where you tend to get, after a very aggressive month, you do get some type of retracement in the first part of the next month. So with May coming up, okay, and this is, obviously a little bit speculative because we don't know if we are going to get that pullback or not starting in May. But you can see these highs back here on the monthly, right? And this would be an area that I would be keeping an eye on down here in this region going into May. Now, to be clear, okay, this does not mean I'm shorting up here in this area. It does not mean that you want to be shorting this kind of a move down here into the 112 region. But I do think if you're looking for buys here, just my opinion, never financial advice, but looking at these highs back here, big move here in April, I do think we have the potential for at least a retracement down here into this area as we head into May before we get a continuation of that move later in May. So that's kind of what I'm looking at right now, guys. These highs back here, we've got that weekly candle from last week. And furthermore, if you really want to get speculative with this, although, again, I would be really careful with this. You've got this kind of head and shoulders formation, potential formation that has developed here, going back to this price action. So you can see here, we've got a potential left shoulder high up here and potential right shoulder forming right now. Now, the reason I say you got to be careful here is because, first of all, this is a 4-hour time frame. And secondly, this is very against the trend. I mean, we've seen a very aggressive rally from the euro recently. So you've got to ask yourself, am I willing to try to short a market after this kind of move? And personally, I would not be looking to short this. But what's interesting about this too is that if you look at the objective, taking this as the neckline, if this is going to be a reversal pattern, right, short-term reversal going into May, then the objective of this comes back here into these highs, right? And this right here is that imbalance, that sell side imbalance that I'm looking at down here between 111 and 112. So if we were to get, this as a short-term, top for the euro, again, looking for a move down here into early May to play the potential bounce from that region. Now, another thing too, okay, add a little bit of confluence to this is if you'll notice here off of some of these lows, right, this market has gotten very, very stretched. Now, nothing says that we have to see a pullback, but if we were to get something like this, okay, down here into a trend line like this off of these lows, okay, something down here in this area in early May, to flush these lows, right, tag this area down here, then this would be a key area to watch for a potential bounce in May for a retest of these highs back here. All right, so, very congested conditions right now, guys, but I do think this area around 112 is going to be the one to watch over the coming days. Now, let's quickly wrap up here with the DXY, because I do think that this matters. A lot of people say, why do you look at both? Because they're essentially the inverse of one another. And that tends to be true most of the time. However, you can see things on the DXY that you won't see on the EURUSD and vice versa. So with that in mind, looking here at these recent lows, for the DXY to turn bullish, and I want to be very clear about this, any kind of bounce we're talking about here is relief only unless, I should say, we see the DXY reclaim levels like this back here. Okay, right around 100.2. If it can reclaim areas like this, then I think that would be different, right? Because now you're back here within this range, and you're looking at a target of these lows back here around 101.8. All right, so if we were to get that, then that could, signal a relief rally here for the DXY. But until that time, you're looking at these lows back here as being, resistance, right? So for the DXY, a couple of things here. First of all, we've got that 100.2 resistance level, and Monday actually closed below a level as well too. You can see through here, this was the area right around 99.2, 99.3. You can see support through here. And this was also, if you go all the way back here, right, you can see that this was essentially the top of this range. Okay, so this range from back here in 2002, you can see where the top of this range is actually the level that the DXY just lost on Monday. Okay, so that could potentially be a sign of weakness here over the next few days, unless, of course, the market can get back above here and reestablish itself. Now, another thing for the DXY, okay, so before you start getting bullish on this market, because again, I would not be getting bullish on this market unless we see something significant from buyers. So if you look here, all right, so off of these highs back here and these recent lows, what you'll notice here is that we have these two highs right up here, and this is a parallel channel. So you've got these lows down here, and notice what's happened recently. We got the close below through here, and notice what's now resistance. So this also kind of lines up with that 100.2 level, to where as long as the DXY is below this, then really I see no reason to get bullish here. Now, if we were in early May to see the DXY reclaim areas like this, okay, so reclaim the bottom of this channel here, right? So reclaim this level and also get back above 100.2, get back above this area, then you're looking at a move back here toward the lows. But until that time, we could just see this market rotate lower, continue down here toward the lows, and 97.7 is going to be that support level. All right, so all in all, guys, the jury is out on what we get here. Again, very sideways market over the past couple weeks. But I do think, like I said, in early May, there is that potential for, at least with the EURUSD, pulling back into some areas of value, just because we really haven't seen much of that. And I do think the market's in need of a pullback here. It doesn't mean that we're going to get it, but if you're looking for a buy, it's never financial advice, just my opinion, but I do think this area back here around 112 is going to be the one to watch. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. See the link in the description for a discount. Trade well out there, and I will talk to you again tomorrow.